Of the three parts in managing trade receivables of an effective process, use of technology, and finding the right team, the technology piece seems to be one that companies neglect the most. They will spend a long time trying to find the right credit manager to manage the portfolio. They will work with other departments to work on processes, but then they don't automate. Their attitude is more like, we bought this system that does the billing and does the manufacturing costing and the shipping and the pricing, and we're done with automation. And we come in and say, absolutely not. That system, we've never seen an ERP system or a manufacturing software, any of the systems that we have worked that do a great job or even a good job at managing the high volume of open items in an accounts receivable. That really has to be done with a very specific collection software. There are probably about a dozen packages on the market where you can buy automation to actually make sure that you are very efficient in your department. Too often we go in and we see teams of people working on the collections of the accounts receivable, but they're not on the phone. They're all sending out individual emails to customers. They're looking at who to call next or who to email next in their aging. They've got everything in Excel. It's a very scary environment. For those of us who are used to heavy automation, we know how much time is wasted. From the studies that we've done, about a third of the time spent from accounts receivable analysts or from collectors, a third of the time is spent looking at what they're supposed to do next, determining priorities. That is not how you manage an accounts receivable department. That should be an automated workflow query that someone logs in the morning and it says, "Good morning, Pam. You have 85 calls to make before noon. Have a nice morning." Not pulling up an aging and looking through and trying to figure out who to call. So what we look for in this automation and the opportunity is, are the work queues set up automatically for the collectors? Are the collectors focused on what's important in the portfolio? Are they calling a $50 balance at the same rate they're calling a $20,000 balance? We've got efficiency problems in that case. Are we automating the notices on the small balances? Are we confirming invoices if we've got a lot of custom invoices? We have one client that bills differently every single week. It's a service business, it's custom, and these invoices have to be approved one at a time. It's not a PO environment like we're used to in manufacturing. And in that instance, they want all invoices confirmed by the customer. I received it, it's good, it's accurate, and it's being processed for payment. That isn't something where we're going to sit and make 700 calls or to 700 customers to make sure they got invoices. It's an automated environment where we send out the notice 10 days after the invoice is out. Did you get it? Is it accurate? Please advise on payment information. So that's just an example of a process that takes people out of it but still ensures strong cash flow, because it's at that moment where we can have someone come back and say, "No, I didn't get it," or "No, that's not right." Instead of waiting until the invoice is 30 days old or 20 days past due or whatever a typical credit department would do, the automation takes care of all of that. So we're looking at how a department uses automation in managing trade receivables, not just being able to go in and look at payments or invoices or anything like that, because automation is moving to portals, both from a vendor perspective and a customer perspective. So our clients are moving into the vendor portals so that their customers can come in and pull a statement, look at their invoices, pull credit memos themselves instead of having to have someone go and send these things out. Because when we're going into our customers' systems, we're also going into the customer portals. Do they match? Do they have the invoices that match our invoice? What's not in there? What do they need another invoice for? What do we need to get proof of delivery on? So that automation is really growing leaps and bounds. And what we find is so many businesses are still stuck in this using Excel spreadsheets to manage the accounts receivable. And the worst part about that is if you only have 100 customers, it's probably quite doable. But as you get into heavy volumes, it's impossible to keep up on a spreadsheet. And I see them going in and erasing old notes and putting new notes in, and it's just a mess. And you cannot, I've never seen someone in a spreadsheet environment managing receivables report accurately on the most important pieces of managing the trade receivable. Number one is, when is the cash coming in? And if you are looking at a balance that Walmart owes you $4 million, you should be able to, with the help of software, a collection package, you should be able to tell me, I know Walmart owes us $4 million, $2,182,000 of that was sent last week on these dates, and here are the payment confirmations. If you can't do that and then tell me which invoices are going to clear with that, you are not maximizing the availability of collection technology out there. It's the same issue on the credit side, is that we shouldn't be pulling credit reports, printing them out, looking at credit applications, printing those out, and then sort of putting information in or looking at these files to determine how much credit we're going to grant. You know, that's what we did in the 70s and the 80s because we didn't have any technology. Now it's simply a matter of knowing which elements are important from the data we collect to make a credit decision, entering it into the database, and then using these logarithms that we've already set up to tell us how much credit we should grant for that particular client's portfolio and that particular customer. So all of this is done with automation, creates incredible efficiencies. We are able to, our client can look up, they can go online anytime or call us up and say, how much of our receivables are at high risk of defaulting right now? What's the total dollar amount? And we should be able to hit a button and say you have $4.2 million that's at high risk of a default, so that they can make decisions. The reason that our CFOs love the service is because now they can make the decision, do I take on more risk? Or am I worried about that $4 million? Is it too high? Is it too low? They can make decisions based on the data that comes out of this software. So we're always looking for where that technology can come into play to be able to create more efficiency, be more effective in the credit department, and most importantly, be able to generate as much cash as we can from this asset while still understanding the risk of the entire portfolio.